some well-known billionaires are selling a lot of their stock. And so the question is, do they know something we don't? Let's jump in and find out. So according to an article published on NASDAQ recently, Jeff Bezos just sold another $3 billion of his Amazon stock. And so far in 2024, that brings his total to $13 billion of stock. That's a lot of stock. Warren Buffett is famously at one of his all-time high cash holdings. He's been selling, he's been liquidating stocks, and the list goes on and on. So what's going on, and should we be concerned? There's a lot of reasons any of us sell stock, including billionaires. In fact, the article about Jeff Bezos selling stock goes on to say, while the exact reasons for Bezos stock sales are unclear, investors should know that he often uses this money to fund his ventures, which include space exploration company Blue Origin, the $2 billion Jeff Bezos Day One Fund, which supports homeless families and early childhood education. So yes, there's a lot of reasons why billionaires sell, but maybe there's something else going on. Maybe there's something that's driving them to sell sooner rather than later. And a major change that has started in 2024 and is going to accelerate and become law, actually, on January 1, 2025, it's going to change things. And that is the law that mandates which employees qualify for overtime. And right now, there's many employees that are classified as salaried employees, and it's really so that their companies can work them long, hard hours and not have to pay overtime. So there's a final rule that went into effect, and you can see before July 1st, 2024, anybody making less than $684 a week had to be paid overtime when they worked over 40 hours a week. Then in July 1st of 2024, that increased a lot, right? About 25%. Anybody making $844 a week or less had to be paid overtime when they worked over 40 hours a week. And that number is jumping again January 1st, 2025, a pretty substantial increase to $1,128 a week. So pretty much anybody making about less than $60,000 a year, their company's going to have to pay them overtime. Okay, so why is this happening, and what does it mean to people? Well, you can see that, over the last 30 years, the wages on the real median household income in the United States has had a nice increase all the way up until the pandemic, and then you see that dip. So let's zoom in on that dip, which happened right at the pandemic. So in real inflation dollars, the median household income went from a little over $76,000 a year to about $74,000 a year. So that's a pretty big change. And what that means is we're not keeping up with inflation. And so this rule is designed, as companies are reporting record profits now, and the companies have benefited, but the question is, have the workers benefited? And this Department of Labor rule change that takes effect January 1st of 2025, I think is designed to force companies to let some of their employees participate in some of the upside. It's been too lopsided. Now, this is not a political channel. I'm not making a political statement, but you can see this data from the Federal Reserve. It just shows that, the average family, actually it's probably closer to $78,000 to $74,000 a year. That's $4,000 less a year that they're making now than what they were making before the recession. And I don't know about you, but most families don't have an extra $4,000 lying around. Life is getting expensive, and the employees have not kept up. So what does this mean for us? And I'm going to circle back to the question that I started. Billionaires selling their stock, Warren Buffett having one of the record high holdings of cash in his portfolio, Jeff Bezos selling stock, other billionaires selling stock. What does that mean? Well, for somebody to sell their stock this late in the year, if they just wait until January 1st to sell that stock, they can hold off paying the capital gains on that. So the stock that we sell in 2024, for most of us, the taxes due on that is, I'm not an accountant, but it's going to be April 15th of the following year. But if you wait until January 1, for most people, the taxes due on that stock, if you sell January 1, 2025, January 2nd, January 15th, whatever it is, it's not going to be due until April of 2026. So what's causing people this late in the year to trigger capital gains tax? One of it might be they're worried about, is the U.S. going to have this promised soft landing that frankly is really, really hard to achieve. It usually does not happen. When we're trying to bring inflation down from a high level to a low level, unfortunately, that means we as a country are signing up for paying to tame inflation. We've seen that time and time again. Super hard to do that without triggering a recession. And so the question is, might that be a reason these billionaires are selling stock? And one thing I want to share with you is something called the SAM rule, SAHM. And the SAM rule is a way of looking and saying, are we already in a recession? A lot of folks would say we are in a recession. It hasn't been officially called yet, but a lot of folks are feeling the pain. These are difficult times for a lot of American families. And the SAM rule, which was developed by Claudia Sam, looks at the 3-month moving average of unemployment and compares it to the rolling 12 months. Say, how does the current 3-month unemployment rate compare to what's happened over the last 12 months for that 3-month rolling average? And you can see, according to this, and it's got a really good track record. You can see the chart in that dark gray line. Those are recessions, and you can see when the SAM rule gets triggered. So it's not a leading indicator. It's more of, it tells us we're likely already in a recession, and the SAM rule has been triggered. So according to that rule, we're likely already in a recession. Now, what do I think? I think we're in what I call a rolling recession. So there's pockets of the economy that are hurting, and those pockets are going through their sector's recession. And frankly, it's probably a good way to avoid all sectors going through a recession at once, right? That's the hard thing. When people lose their jobs, and there's a lot of industries, there's a lot of sectors that are all laying off at the same time, it makes it that much harder for anybody to get a new job. So if we're going to have a recession, a rolling recession can be one of the milder recessions that we can have. And hopefully we do get this soft landing, and the Federal Reserve is able to pull that off. So if you're interested, this talks a little bit more about the SAM rule, but more important, what do I think we should do? For guys like Jeff Bezos, now Jeff Bezos has information about Amazon that you and I don't have. So he can make a better call on whether he should be selling Amazon stock. He still owns a ton of Amazon stock. I believe he still owns over 10% of Amazon. Can you imagine what that would be like to own over 10% of Amazon stock? So he may be, just as that article says, he may be raising money to support other causes that he cares about, other ventures that he's supporting. But he also might be saying, Amazon employs a lot of people. And maybe, I don't know, maybe more of those people are going to have to be paid overtime than what they were in the past. And that's going to raise Jeff's costs, and not Jeff's, but Amazon's costs, labor costs. Good thing for the Amazon employees, not such a good thing for the Amazon shareholders. So maybe that's going on. I don't know. But what I do know is your asset allocation is really important. What percent of your portfolio is in stocks and bonds? And when the stock market's had as strong of a run as we've had here recently, it's natural, it's normal, it's common for me to see people whose asset allocation maybe has skewed more towards stocks than what their long-term goal, what they've set out for. Maybe they said, they want to be 50-50, just to toss something out. This is not financial advice. But because the value of their stocks have gone up, in the last 12 months, they've gone up by 30%. So could a 50-50 portfolio now be 60-40? Could it be 65-35? It could. And the time to rebalance your portfolio, it's a lot easier to sell stocks to rebalance towards that long-term allocation when the stock market's at all-time highs. It's also a lot easier to make the decision as to when you want to retire. Remember, that's what we're doing all this for, is to get money for financial security in the future so we can have that future. Part of that future for many of us is retirement, and that's why I made this video here. Why waiting to 65 to retire might be a big mistake. Thanks for watching this one. I'll see you now.